Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today, we're going to talk about financial secrets of the wealthy. But then again, if I'm talking about it, is it really a secret? We're going to get into it. And welcome to Foci Optics. Check. Stop Struggling Now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back. And today, you want that financial independence. You want to be financially wealthy. We're going to talk about the allocations and how the millionaires, the billionaires spend their money, what they allocate their money for their assets. You might be a little bit surprised. Some of you may have been paying attention over the last few months and may know kind of what you expect to see. But before we get into it, as you can see, we're on the Stop Struggling Now YouTube channel page. And once again, I want to thank everybody for your support and watching the videos and sharing the videos. And as you can see here, there's a join button. And that helps us have memberships. And it's a monthly membership, and people get videos, just 1 or 2 videos a month. I give them special messages under the community tab that they can see that others can't see. And there's a few other perks such as emojis, and you have icons. So join please if you want to. And now we're going to get into, everyone knows that most of the wealthy people have what they call equities. Equities are things such as stocks. Okay, that's the stock market. And so therefore, I would be remiss if I didn't talk about Webull. Once again, down below in the description, there is a link. Please download the Webull software and link your bank account just in case you want to upload money. And they have promotions running all the time. Sometimes all it takes is to link your account, get your email confirmed, and they'll send you a free share of stock. Other times, they'll need you to deposit $100 or more, and then you'll receive a free share of stock after 7 days. So these are the 2 ways that you can get free shares of stock. And as you can see on the screen now, it says get 2 free stocks. I don't know what their promotion is right now, but like I said, it changes from month to month. The other platform, and before I get into that, Webull has a lot of information on the platform. It's an app, and it has so much information regarding stocks, and actually you can do options. And for all of those who don't want to spend any money, you can do paper trading on Webull as well to see what would happen if you own the stocks. But let me tell you right now, when you're doing paper trading and then you find out that if you would have deposited like $200 and you picked some shares of stock, and on your paper trading it went up to $500, you could have doubled your money. Once again, this only proves the point. Those that take risk make the money. Those that don't take any risk usually will not make any money. And that is the thing with stocks. You have to study. You have to do research. Again, I'm not a financial advisor. I'm not a financial planner. So take my advice as it is. But I'm just saying, if you want to invest in something, you want to be wealthy, you want to be educated, you want to be rich, you want to understand business, you have to study. You can't order something and think that's how it's going to be. Everybody has their unique style on what they want to do. So just because it worked for one person doesn't necessarily mean it's going to work for you. But that's why I'm saying the Webull platform allows you to do research Allows you to do different types of tradings like options trading, and it also allows you to do trading with limits and other factors, but you can learn all of that on the platform. So that's what you should be doing. Robinhood, the other one that gives you a free share of stock just for signing up. Download the app. There'll be a link down below. And then you have to link your bank account and confirm your email address. 7 days later, they will give you a free share of stock. They have promotions all the time as well. But that's the one right now. With Robinhood and with Webull, once you're inside the app, you can invite, you can refer other people to the program, and by doing that, you can earn free shares of stock, which now means there's a way for you to get an extra stream of income, in this case stocks, by referring other people. So therefore you should be telling your family, your friends, your nieces, your nephews, whoever's over 18, you need to get them on board. You can do it with Webull and Robinhood, just like I have links down below. You get a free share of stock, I get a free share of stock. The same referral situation happens. You do it all the time when somebody says, what's a good restaurant? What's a cool car to buy? What do you think about this clothing item? What do you think about these shoes? What do you think about where's the best, what kind of food should I buy, or what grocery store should I go to? You ask people all the time, but you don't get paid for your reference, do you? In this case, you have Webull, Robinhood. So do it. And without further ado, let's get into this allocations. I'm going to have a link down below for both Robinhood, Webull, and M1 Finance. Please click on them. Please sign up. And we all know the allocation. So think of it this way. What do you think a person that has basically a net worth of $0 to $10,000, you're going to think, well, what you're all taught, 90% of people, buy a house, get a car, get a job, give your money to a mutual fund or 401k persons, and go on about your business. Well, you're about to see something very interesting here, because we're trying to create wealth here, ladies and gentlemen. That's what this is all about. Stop struggling now. Here we go. Here are assets allocations. And I'll have a link down below because this is from the Financial Samurai .com website, but there'll be a link down below for it. But as you can see, just what I was using, this first $10,000 level, look at here, liquid is green. Primary residence, hefty chunk. Vehicles, assets, hefty chunk. Retirement, hefty chunk. Life insurance, very small. So now look, as people start going up in value, 100K net worth, you still see this liquid here. You still see primary residence taking up a whole bunch of chunk of your money, or as asset. And now the vehicles start getting reduced because they realize vehicles go down in value and it's not really an asset. So why are you putting a large chunk of your money there, right? Retirement and pension funds starts getting a little bit bigger. They start investing, putting money somewhere, and then you just see these little chunks here and there. That's nothing major when you're doing. Now a person with 1 million, you still see they have a cash, but look at here, the primary residence is shrinking. Vehicles shrinking. Retirement pension fund, that's still a solid. And then of course we have others such as mutual funds is in the light green. You have stocks here in the light blue. You have real estate creeping in now. So you can see here, and the dark blue, ladies and gentlemen, is business interest. Notice how when you're at 10K, small business, 100K, larger business, 1 million, more business. Remember those streams of income? That's right. These are business interests, meaning they own LLCs, corporations, companies, one percenters. See how they play. Now, you can only imagine what we've been talking about for a long time. If you want to be a one percenter or 10 percenter, you're going to have to be in this blue zone, business interest. You're going to have to be in this other blue zone, which is real estate. You're going to have to also be in the light green, mutual funds, light blues. I don't know if the green is mutual funds here. The light blue is stocks. So as you can see, and managed assets are nice too. But let's go to where we're talking about 1 billion, where you have billionaires. And by the way, there's only less than 4,000 billionaires on the planet out of 7.5 billion people. That's a travesty. But nonetheless, that only shows you that the 4,000 billionaires control a whole bunch of wealth. And that means 99% of the people do not. But look at this. When you're up here in the stratosphere, 100 million, 10 million, 100 million, 1 billion, this blue over here, business interest, this is why you don't see these guys sitting on the couch, sitting on a yacht, sitting here buying $1 million cars time and time again just for the hell of it, because they have businesses to deal with. That's what I've been saying forever. Just because a guy has millions doesn't mean he's not working. You're still working. There's no millionaires just sitting around. That's because they have business interests, and that's how they stay a millionaire. This is how they stay a 10%er. This is how you stay a 1%er. You have to have revenues coming in at all times. Now, and again, here's the blue, the real estate. Notice the real estate is here, but it's a lot smaller portion from business interest. On all fronts, once you get over $1 million, it starts getting smaller and smaller for the real estate. And what you'll also notice is this primary residence nonsense. That a lot of you are sitting there going, I want to buy a house. I want to get a house. Look at here. The 1%ers, look at the portion of their primary residence that they actually have. So there goes the notion that you need to have a house. They only tell the people who don't have that much money to get something that basically you're paying for with a loan. And notice the rich people, this reddish orange, notice how small it starts getting as you make more money. Because the primary residence isn't the thing. Your money doesn't know if it's a primary residence or a secondary residence or a rental. It doesn't know the difference. It just knows that you're putting out there $3,000 a month, $2,000 a month, $5,000 a month, $10,000 a month. Does it know if you own it or not? No, your money's still going out the window. Same amount of numbers. So, and notice the cash, the liquid, is even a smaller sliver. Because cash sitting around doesn't earn you any money. You want to be wealthy, your cash needs to be earning you money. Notice the bigger the pile of liquid cash, the less assets or less wealthy is the person. So notice all this. Then we have other assets in the white, which is a small sliver. Okay? And I can't see the fixed income investments is in here, small sliver. Managed assets trust, notice they have a trust, small sliver. All these small slivers add up. And notice some of these slivers don't even exist over here. They're so small that they're negligible. When you are 10K, 100K, even up to $1 million, you start seeing this shift from right to left, or shall I say left to right, and you start seeing how this just starts cascading this way. So this is what you want to do if you want to be wealthy, right? Now, let's talk about how American millionaires are doing their money, and I'll have a link down below to this. This is from spring 2019. Asset class, look at here, 55 and under, 45% equities. Across the board, it's over 40% equities no matter what age you are. Half almost in the stock market. There's a reason. Over time, stocks outperform almost everything. Bonds. The reason why people have bonds is because, quite frankly, it used to be where you would have a 3%, 4% bond rate. So all you had to do was buy a bond for 10 years and you knew you were going to earn 3 or 4% annually on your money. which if you had, a substantial amount of money or even not, it doesn't matter. You're still earning this type of money by doing nothing. So this is why it used to be, and as you can see, 55 and under is at 10%, 56 to 69, 21%, 70 and over, higher, and then total. So you can see it's a small portion when you're younger, but still bonds are good. So you always have to keep that in mind. If they ever jump up past 1%, where they get into a 3 or 4 or 5% scenario, that's when you really want to get into bonds. But under 3%, when inflation is 3%, kind of makes no sense. Short-term investments, you can see here, 19%, 15, these are all 15, 16, they're in the teens. International investments, if you're lucky enough to invest abroad, again, 9%, 10%. Investment in real estate, look at here. Asset class. American Millionaires. Look at this. People, you always hear the thing about millionaires are made because of real estate. You hear this a lot. It's very true, but it's not a large percentage as you think. It's under 10% that they have invested in real estate. Alternative investments. 5%, 2%, 1%, 2%, depending on age. 55 and under is 5%. Alternative investments, what could that be? Bitcoin? What else could it be? Art? What else could it be? There's several things. Baseball cards. I mean, there's several things. Coins, stamps, what? Several things. Think about that. And then, of course, my stackers. Look at here. The American Millionaires. They're not stacking those precious metals. 1%, 55 and under. 56 to 69, 1%. 70 and over, yeah, they're like, why am I bothering? Total average, 7%. So, again, my argument against stacking gold and silver just for the hell of it without a end game makes 0 sense. And as you can see, the American Millionaire is saying the same thing. The 1%ers, they don't lose. They know what they're doing about this. It kind of makes sense that once you buy precious metals, it doesn't earn you any money. That's not where the millionaires want to be. Whenever they spend money, they want to have cash coming in. Let's go with the high net worth individuals. In case you think I'm picking and choosing, just so you can see that there's a normal type of thing going on here. Look here. All right, this is from 2019. Cash and cash equivalents, 27%. Equities, 26%. Once again, notice how equity for high net individuals, stocks, and bonds could be in the equity as well. Notice how high, 27%. Again, the others were 45%. It's always up there. So that should tell you something right there. What are you afraid of? You're going to go with that story that it's a casino? You're going to go with that story that I could lose money? You're going to go with that story? Well, all the high net worth individuals and the wealthiest individuals, they got their money right in this stock market all the time. And you're worried about losing. You do realize if the stock market loses, you have millionaires and billionaires with millions, hundreds of millions of dollars in the stock market. And if this stuff goes down where they lose all that money, that means corporations are going to disappear. So think about it. Stop being a naysayer. Stop trying to fight against the system and join them. Stop trying to be a 90%er. I'm exasperated by this. Fixed income. Once again, fixed income. This could be earned income. This could be extra streams of income. But again, 18%, they always have to have money coming in. You got to have income coming in. These are the streams of income, ladies and gentlemen. 8 and 7, 8 streams of income, 7 streams of income. It doesn't matter if you duplicate streams of income. If I make online money from FBA, let's say, Amazon, I put products on Amazon, make money. I put products on eBay, make money. I put products on Etsy, makes money. That means I have streams of income from each one of those. You need as many streams of income. Doesn't matter how many type of varieties you have, just streams of income. Once again, real estate is what? One, two, three, fourth on the list. Once again, it's not number one. It's not number two. It's not number three. Because real estate, even though you have to buy the property and then you have to monetize it, meaning you have to have somebody rent that property in order for you to receive money, that is just another stream of income and another asset class that potentially goes up in value because it's calculated a different way. It's commercial real estate we're talking about, and it's calculated based on the revenues coming in. So it's pretty simple. If I pay $1,000 per month right now, and in 10 years I can charge $1,500 per month, that means my property is worth more now because I can charge more. And if I have 4 units, that means my property has went up a lot. If I had 100 units, that just means my property went up a whole lot more than the 4 units. So this is why attaining real estate along the way helps you in the long run, and it also produces another stream of income, and this also means you have an asset, and that also means your net worth is going to be a lot higher. And once again, we're at the alternative investments. So again, you know I love it. Art, Bitcoin, exotic cars that are only 5 exist on the planet, like a LaFerrari, for instance. Okay, so that's pretty much it, ladies and gentlemen. Hopefully you understand that if you want to be financial independent, if you want to have financial freedom, then you have to create wealth for yourself. And anybody can do this. I don't want to hear I only make $25,000 a year. That just means you have to have a $25,000 a year budget. And that also means you need to get extra credit. And that means you need to get extra income. That just means you have to do things a little bit differently. That's all it means. And it's hard work. This isn't easy. If it was easy, then everybody would be a millionaire. Everybody would be a 10%er, a top 10%er. Everybody would be a 1%er. That's not how it works. You can give a person a book, tell them exactly how to do it. Out of 10 people, only one person is going to do something. The other 9 people are going to give it a half-assed try. So this is why I can sit here and tell you what to do. Millionaires can tell you what to do. Billionaires can tell you what to do. Your brother, your father, your mother, and sister can tell you what to do. But until you take action, you ain't going to make it happen. And this is why you can keep telling people, because only a small percentage of people will actually take the 2, the 5, the 6, the 10-year program and make it happen. Everyone else, they want something to happen in 2 months, 6 months, 3 months, 5 months, 1 year, 2 year. This is a long-term plan, ladies and gentlemen. This isn't short-term. And with all that said, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And you know it's hard out here. That's why I'm creating the wealth for you and telling you what to do. You haven't realized it, but we've been talking about streams of income coming in ever since I started this channel. All you had to do was pick and choose what you want to do. You don't want to do Amazon? Fine. How about doing affiliate marketing or referral marketing? Or how about setting up your own website, your own business, and your own social media accounts and doing a video or doing a podcast video on StreamYard, which is free. You can also get OBS, which is free, which is what I'm recording this on right now. You can also get podcasts from Buzzsprout. I'll have links down below for all of this. For free, you can start a podcast. There's really no excuse as to the amount of ways that you can do extra income and streams of extra income, because just like when you produce a YouTube channel or Instagram or a Buzzsprout or Facebook pages, you can put links down below that can help people, or put links down below for you to send people somewhere to help people, or put links down below for your own business. So don't let this opportunity pass you by while you have 20, 30, 40 million people out of work looking for help. Come on. Let's do it. And with that said, keep your head up, keep moving, and I'm out.